We're seeing a positive session for the Australian share market despite weaker leads from offshore, where the S&P 500 was down by 0.7%. We are still seeing the growth sectors coming under pressure, and that's over fears of this escalating trade war between the US and China. And in particular, commodity-based stocks are coming under pressure. So the materials sector and the energy sector in the red today. However, that's been offset by the gain that we've seen in the banking and healthcare sectors, and that means the market is in the black today. There is plenty of news around today. We've seen Village Roadshow down 10%. It's back online after doing a capital raising. We're also seeing Freedom Foods down by 6% after its update. Freedom Foods saying that sales this financial year is expected to be up 35% at $353 million, but that's slightly below the guided range of $360 to $380 million. However, in the new year, it is expecting sales to jump on the back of new products. In FY19, expecting to see net sales between $500 to $530 million. Still, the shares are down by around about 6%. Mortgage Choice shares down by 1.5%. It's announced a new broker remuneration structure which should leave franchisees with higher remuneration and reduced income volatility. It has increased its average commission payout on residential mortgage lending from 65% up to 74%. Premium shares, PPS, are doing well, up by 4.5% on the market today after announcing record inflows. It sees funds under administration over $8 billion. InvoCare also doing well. The shares up by 3% after an acquisition of Archer & Sons. And AP Eager up by 1.7%, announcing a record profit for its first half. A2 Milk shares, though, down by 0.7% after its update, saying that revenue for the financial year expected at 922 million New Zealand dollars. That's actually just ahead of the range that the company has given. 900 to 920 million New Zealand dollars was its previous guidance. The company also saying it expects higher marketing costs in the new financial year. However, the EBITDA to sales ratio is likely to remain steady at 30%. So all in all, a good session for the Australian share market, especially given the softer leads that we saw overnight. But we are seeing growth areas and commodity-based stocks coming under pressure, but the banking sector outweighing the weakness in the commodity space and the market making gains.